Holy smokes, everyone. The latest warning, the sirens are going off. The Federal Reserve is fueling another real estate price bubble that is going to wipe out home equity and America's wealth. But what? The Federal Reserve causing bubbles, financial instability? They would never do that. The Federal Reserve is all about creating equality and wealth and prosperity for all Americans. But what you have to know is, everyone, is with keeping monetary policy so loose and by having rates so low, it is forcing people to take riskier and riskier investments in order to beat inflation. Because we have inflation around 5.4%. So you're not going to get a return in bonds. You're not going to get a returns on cash. Even safe haven assets haven't been performing so well. So you really have to go all in on investments like real estate with high leverage and on doggy coin. And this is leading people that have been making, sound, safe investment decisions to now question their decisions because they've got their neighbor Ned. He's, been going all in on cryptocurrencies, meme stocks. He's been buying real estate on high leverage and he's been getting crazy returns. Meanwhile, Johnny, he's just here, with his savings, with his emergency fund, with his, bonds. He's getting no returns. So now Johnny's sitting there and looking at the returns of Ned and he's saying, stuff this, I'm going to go all in on real estate and stocks. I don't care if they're at all-time highs, they can only go up. And it's this psychology that creates financial instability when everybody goes all in and takes high leverage. And now investors are putting out warnings to say this could have dire consequences for people that just bought a home during the last year. Okay, everyone, let's not waste any more time. Let's get straight into it. Okay, so have a look at this, everybody. Fed is stoking another real estate price bubble that will wipe out home equity, investor Peter Buckvar warns.
Market does correct. How much wealth do you think could be wiped out?
Well, I feel bad for the people that bought homes over the past year because they're the ones that paid the very elevated prices.
Wow, so firstly, he's saying he feels bad for people that are bought during the past year because we're seeing the US, and not just in the US, here in Australia as well, and pretty much anywhere around the world, the housing market is going crazy. But could this be the peak, everybody? And could these people that just brought the top and could be facing negative equity?
So for someone who put 5% down and you see home prices pull back, let's just say 10%, for those, relative to a year ago, well, their equity is basically wiped out. For those that have owned for a while, that have built up equity, they'll be much more insulated. So I'm not expecting, certainly not at all, a repeat of the mid-2000s where so many people were buying homes just out of pure speculation in order to flip them, and the banks were so over-levered. This is just an unfortunate situation of people just paying so much for a home relative to their incomes, relative to where prices were pre-COVID.
So I do agree with him there. Things aren't as bad as 2008. Things were absolutely off the charts crazy in 2008 with the subprime crisis and with the easy loans, the ninja loans that they're giving to people. But if they do keep this easy monetary policy, it's going to cause people to take on riskier investments. So he says here, Buckvar, who went on inflation watch in mid-2020, which has turned out to be true, inflation is going out of control, has been critical of the Fed policy through the pandemic. By maintaining unprecedented quantitative easing measures through the economic recovery, he notes the central bank created a spike in housing demand that has been overwhelming supply. The result is skyrocketing prices. And that's exactly right, everyone. It's just simple economics 101, supply and demand. We saw housing supply around October 2020 completely plummet to around 3 months, but now supply is starting to creep up, and that's what we really do need. And we need to be building more homes, and we have to really watch closely what's going to happen to housing supply, because if it does go over 7 months worth of housing supply on the market, that's when we'll start to see prices maybe declining in some areas. So it says here, since housing is the most interest rate sensitive part of the US economy, Buckvar has confirmed the repercussions will be far reaching. It's very hurtful for the buyer, particularly the first home buyer who wants to own a home, who is now getting priced out and then in turn is renting. But renting prices are also going up dramatically as well. And I completely agree. We're seeing the dream of home ownership completely being, washed away. There are so many people that just with their current incomes, they have absolutely no chance of owning a home in many markets around the world. Even the affordable markets or markets that have known to be affordable in the regions are now starting to get expensive as well. So this is really a global housing crisis, and it seems like nobody, none of the governments, none of the regulators want to address the problem. But he suggests there is evidence that the air is leaking out of the bubble. He said, people are now seeing sticker shock in home prices and they're backing off. Buyers are calling a timeout. They said, I can't afford this, or I want to wait to see home prices cool down. And this is something we are seeing in the US and again in Australia as well. People are seeing these crazy house prices and saying, look, either there's no way I'm paying, this crazy price for this home, this, little fixer upper, and people are still paying crazy prices for them. They're saying, look, I'll wait for prices to cool down, or just simply, I can't afford it. And according to the latest surveys, most Americans think it is a bad time to buy a home right now. It says here, a new report from Fannie Mae found that only 35% of consumers believe it's a good time to buy a home, representing a record low since Mortgage Giant began its survey in 2010. Meanwhile, 67% of Americans believe it is a good time to sell a property. So what that means is, everybody, the economics of supply and demand that we've had last year and early this year could just be about to have a big shift, because we're having lots of people saying it's a bad time to buy and 67% of Americans think it's a good time to sell. And we are seeing this in the data with supply as well. So it looks like the housing market, this crazy housing market that we have, is getting very close to its peak. And I'm not saying, the housing market's going to completely crash anytime soon, but I do think we will start to see a cool down in early 2022, especially with these evictions that are going on and with the foreclosures going on. But that will take time for that process to go through, and it'll take time for us to get that data. Also, late 2021, the Federal Reserve has said, let's see if they keep their word, that they will be tapering their mortgage-backed securities purchases and treasuries purchases. So that means interest rates will go up as well, and interest rates have a big effect on the housing market. So even if it's just a small change with interest rates going up, but if that happens at the same time, supply comes up, that will just add more downward pressure on house prices. So everyone, that was just a quick update with some of the information that's happening in the housing market right now. You let me know what you think. Will we see a cool down in the housing market, or even some price declines in 2022? Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest happening in the housing market, stock market, and global finance news. Now, if you're bored, I'll put up some other videos here. I'll see you all there.